Good evening, everybody, and welcome to Millionaire Mindset Mondays. We're here every Monday night, 6 p.m. EST live. And then you can, if you missed a video, you can follow on YouTube, Investing with Jan. All the interviews are uploaded there. So I am Jan Carmanico Reeves, and as you know, I'm on a mission to make real estate investing fun, easy, and profitable. So tonight we have with us David Ploeg from Saskatoon. He's a real estate investor, and welcome, David. Thanks for being here tonight, and tell us a little bit about your background and yourself, how you got started.
Yeah, hi, Jen. Thanks for having me. Uh, I, s- my parents started in real estate way back in the 80s in Calgary. So I got to see them doing real estate as I was growing up. And when I was done university, I moved out to Saskatoon in about 2007. I used a vendor take back to buy my first property. So I moved here broke, and in 4 months I had bought a $400,000 fourplex.
Oh my goodness.
And then I got money in the bank to do some repairs immediately on it and make sure I had a little reserve. I tried some business in the meantime, which didn't work, which means I came back to real estate. And since about 2018, I've been slowly ramping up all my real estate investing.
Very cool. So was it 100% vendor take back mortgage, your first property?
No, what it was is the down pay. I had the bank wanted 40,000 down payment, so 20%. No,
Okay.
10%. They want 10% down payment. I asked the seller if they could lend me $50,000 to buy his property, and he said yes.
Very cool. Very cool. So your first property was a fourplex.
Yes.
And you
Yeah.
so essentially you live for free and your tenants paid your mortgage plus.
Well, I made some mistakes. It actually turned out to be one as a duplex, but you learn. Now I'm actually looking at how to turn it back to a fourplex as the rules have changed since I bought it.
Okay. Very good. Very good. And you also have a 12 unit?
Yes. Last year I purchased a 12-unit apartment building in Prince Albert, Saskatchewan, and I've been upgrading the units and increasing the rents. So it's been going well, and actually, it should be increased so much that I'm working on a refinance right now, trying to get a CMHC for 85% of the value.
Nice.
So that
Nice.
would cover all the money I've spent on the upgrades and repairs and give me a healthy reserve going forward.
Very nice. Yeah. So how long you bought that last year?
Yeah.
And how long was the mortgage that you took out initially on it?
I assumed a mortgage from the last seller,
Okay.
as that's was I believe a 35-year mortgage. So the new one is I'm trying to get another 30-year with a 5-year term at 85% so I can recapture some of the equity and value I've added to the property.
Yeah, absolutely. That's wonderful. So you're just in the beginning stages of that as well, right?
Yes.
Yeah, and we were just talking about some of the costs of appraisals and things like that. And it's
Yeah. When you buy one, you be prepared for some much higher costs than like single unit, single
yeah,
family
yeah,
property, like a condo or a house. The
yeah.
cost much higher to close.
Yeah, an appraisal on my house last year I think was 300, but like you're saying on the 12 unit it's like 7 grand.
Yeah.
Yeah, and I was just getting some quotes today for my 7 unit and it's yeah, about 4 grand. So
Yeah.
quite a difference, right? From when
Yeah.
you're looking at commercial refis.
Yes. Yeah, it is quite a difference.
Yeah. But I mean, then you get to pull back the money that you've put into it and rinse and repeat, right?
Yes.
Yeah, so that's the beauty of real estate investing. So, and you're also involved in some partnerships as a money partner. You've got a couple of properties in Ottawa that. your
Yes.
equity? Yeah, yeah. Tell us about those.
So there was two properties in Ottawa. I put in about 50,000 that I actually took out against the equity of my current property.
Very
So
good.
not my borrowed money to make some money. Uh,
That's good
the
to
idea was
right? Yeah.
the idea was to put basement suites in it and to increase the value and then to refinance. As all things, some stuff doesn't go as well as planned.
As everything in
But,
real estate investing, there's always little bumps in the road. Yeah.
but it's to be expected.
Hmm.
So yeah, well, I expect it to. They haven't gone down values, so the values may be maintained and it's gone up. So I expect there to be some value there at the end.
And
And then,
that was
yeah,
um,
go ahead.
that was an equity position.
Yes, that was an equity position.
Okay. So
I
refinance.
prefer equity positions over just lending money, if possible.
Absolutely. Absolutely. Because you lend money, you get a fixed return. It can be a good return, but equity, it just always, always, always goes up in value, right?
Yeah, and you just keep getting it back over and over and over again. So
That's right. That's right. Absolutely. And that's what I offer to my investors is the equity positions because I think it's only fair, right? Everybody wins, right?
yes,
Yeah. Yeah. So those are two separate uh
properties. Yes,
properties with the same investor or with different investors.
it's a combined deal, but it's the same investor group that we all the money partners are the same and all the working partners are the same.
Oh, okay. Okay, very good. But
Yep.
two separate properties.
Yes,
Yeah, nice. And so what were they doing with those to increase the value? The basement suites?
they put in the basement suites and they have made sure they got good tenants in there, and they'll look. Well, hopefully, they'll be able to do some of the further plans, like add more units, but we'll see what the future holds.
Yeah, yeah. It's all about getting creative, right? To increase the value and dealing with cities and and all that kind of
Changing
stuff,
their
right?
mind. First, you can have two units. Nope, nope. We only want one unit.
Yeah, 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 yeah. But yeah. And that's the thing with when you invest into a project, i- if somebody tells you they're going to guarantee you're going to get so much money back on such and such a date, they're they can't. Nobody can guarantee anything. I mean, you make projections based on running your numbers conservatively, but things come up that you can't account for, and investors need to understand that, right? Like it just there's always a little glitch into every deal.
Yeah.
Yeah.
And the communication with that group is awesome. Every 3 months, we get updates, and they'll have a little Zoom meeting, and we can ask them questions and go over what happened. So,
Excellent. Yeah. Yeah. So that you know what's going on, you know what the issues are, and you as an investor understand that these issues come up, right? Like it's just things sometimes go sideways, and that's being able to pivot, that's being a experienced real estate investor.
yeah,
Yeah, and it's great that they do have those Zoom meetings every few months to update you. So at least you know what's going on with the project and what the current challenges are, right?
yeah,
Yeah, yeah, because there's always some, right? Absolutely. And then you also did another private mortgage with lending your RSPs.
yes. So I was able to move my RSPs and self-directed.
Mm-hmm. Through a
Uh,
trust.
so, so through Olympia Trust, yes.
Yeah. Mm-hmm.
So got approached and we talked, and I actually knew them beforehand. So relationships are very important because
Very
it builds
important.
a lot of trust.
Yeah.
The same as the units in Ottawa. I had a pre-existing relationship with them, so there was a lot of trust there.
Yeah.
So this one, they wanted RSP mortgage, and what they plan to do is they got a nice building, 9 unit, and what they're going to do is they're going to renovate, increase the rents, increase the value because it was well under market value
Hmm.
on rents and on the building itself because of that,
Right.
which a lot of people don't realize that apartment buildings are based on the income they generate, not based on how much they cost to build.
That's right. That's right. Yeah, let's talk about that a little bit for anybody who's listening or doesn't understand multifamily investing. First of all, moving your RSPs over to Olympia Trust, that they're still under the RSP umbrella, right? So it's a great way for non-investors to be able to make a better return on their RSP money, and it's not like cashing them in, it's just self-directed, as you said. So it's a wonderful way for people who aren't sure about investing in real estate, maybe in an equity position or how the whole thing works. It's a guaranteed return on investment, right? Well, it's secured against the asset. Nothing
Yeah.
is ever 100% guaranteed, but banks take out mortgages all the time, and they like or giving mortgages all the time. So banks think it's a pretty secured lending deal. So it's, I don't know what the stats are, but I mean it's pretty secure, right? To lend your RSPs on a mortgage.
Yes, and there are some rules around it that you have to follow. They're pretty easy to follow,
Hmm.
but you just have to make sure that you follow them.
That's right. That's right. And through Olympia Trust is the middleman who sees to it that those rules are followed.
Yes.
Yeah. Yeah. So it's not just writing a check to the investor and, setting up, unless it's cash. If it's cash, then, or if you're using a line of credit or something, then you can set up that's Olympia Trust is used for registered funds, whether that's RSPs, TFSAs, um, LIRAs, RESPs, anything registered funds goes through Olympia Trust to make sure it's still under that fund umbrella, and yeah, that the borrowers are legit, right? It's a legitimate deal. Yeah.
Yeah.
Yeah. And yeah, let's talk a little bit about how lenders look at a multifamily building, and that the value is based on the rents, and that's how, or the income minus the expenses. So that's what we try to do, right?
Yeah.
Is increase the rents, lower the expenses, and then go back to the bank because now the building is worth more.
Yeah, just like any other business, the more money the building can make, the more value it has.
That's right. It's not at all like a single family home that
Yeah.
it's market value, right? And it doesn't really have to do with the rents that it brings in, but anything 5 units and up is considered commercial, and that's how they value it.
Yeah.
Is based on the net operating income, which is rents minus expenses. Right? So you want to increase that net operating income so that when you go back to the bank for the refi, and then you can pull out the money that you invested and get yeah, a larger mortgage on it, provided that the building can
Supports it.
yeah, yeah, warrants the new mortgage. But oftentimes, like we're looking at CMHC refis, and with CMHC, usually you can get a higher loan to value and a longer amortization, and a better rate because it's insured, right? So, I mean, there's a cost for that. There's a fee, right? An insurance fee, just like first time home buyers. But it's worth it because then um, it makes lower mortgage payments. So the building can sustain those mortgage payments. So it is worth it in the long run.
Yeah, so while your building's going up in value because you've been diligent on increasing your expenses and increasing the income,
Hmm.
You're just gonna get more, be able to get more.
That's right. And that's the game of real estate investing, right? Increase in value. Yeah. So you're out in Saskatoon.
I am. It's getting very nice here.
Yeah. Oh, it's actually it's beautiful here too. It's a nice sunshiny day, voting day. Did you vote?
Oh, I did early voting.
Oh, you did early voting? Okay. I walked over and voted today. It was a beautiful walk. Um, yeah, so you're looking for properties out there now, and you're looking to bring in passive investors on a new acquisition.
Yeah, so I have a few prospects in around the Saskatoon area, and I like it because it does look like it is really starting to take off. So it's going to be a really interesting year this year. Even last year, the vacancy rate in Saskatoon was 2.1%, which is the lowest it's been
Yeah.
in over a decade.
Yeah,
And the average rents went up 7.9%.
nice, nice.
And since we don't have rent control, it doesn't matter if you buy a building that already has low rents, you can still raise it up to market.
Right, nice, nice. And even if there's an existing tenant in there, you can raise the rent.
Yes, you can raise the rent. You have timelines you have to follow. It depends if you're a member of the landlord association
Okay,
or not. If you're a member, it's 6 months. If you're not, it's 12 months. But
okay,
that's it. The amounts can be increased at any time.
okay. Nice. Well, that's in Ontario. One of my buildings is built after 2017, so there's no rent control on that, which is kind of nice too, right? Same, same thing. So, what is up and coming about Saskatoon? What are the key indicators that people should invest there? What's the growth opportunities and industry that's going on there?
Well, one, we do have a lot of potash. There's several mines very close to Saskatoon.
Okay.
Potash, for people that don't know, it's used in fertilizer. So it's used all over the world, and Saskatchewan has huge amounts. There's actually a
It's
lot of natural resources here.
Yeah, is that the only place that what's the word I'm looking for? Has potash in the world?
It's not the only place, but
Okay.
it's some of the most here, and we got some of the biggest mines here. So,
Okay.
but
I
then we also,
I've heard a lot of talk about the Canadian supplying US market, the potash that like
yeah,
the sole supplier of fertilizer or potash for their
yeah, it's
fertilizer. Mm-hmm.
yeah, and then like there's a lot of natural resources,
Mm-hmm.
but one of the big things like uranium, Saskatchewan has a load of high quality uranium.
Okay.
So there's a lot of mines being done for that.
Okay.
So which is going to be used in all kinds of nuclear power plants and anything else that you need it for.
Okay, very good. Very good. So,
Uh,
and I guess the cost of living is fairly reasonable there.
I was just getting to that. We have some of the
Okay.
lowest housing prices in any major city in Canada. Uh,
Okay. So that's why
there
people,
are places that are cheaper. Not going to argue that,
yeah,
but we have a really high household income. That's actually the second highest in Canada.
really. So for
It might have dropped
CHC,
to third, but
yeah,
last year when I checked, it was the second highest in Canada.
nice. Yeah,
And then we have a much lower cost of living.
nice. So, like I was saying, for CMHC affordability for MLI Select, that would be a great place, right? With the affordable rents. I know
Yeah,
in Edmonton they're considered 1,600 for affordable. Do you know what they are in Saskatoon?
I don't know what they are in Saskatoon.
Oh, okay. Okay. Interesting. So yeah, that's a up and coming market for people to keep their eye on. And
Yeah, and we have some our rules and Alberta rules are very similar. It will not take us years to get to evict a tenant. Um, in 2 to 3 months is would what you should budget for.
okay.
Uh,
And that's if you're taking over a building?
it doesn't matter if you want to evict a tenant for non-payment, it's
Hmm.
2 to 3 months.
Okay. Okay. And what if, well, I guess if you're taking over a building, you can just increase the rent.
Oh yes.
Yeah. Yeah.
Depends when the last increase was. So
Right.
there's timing issues, but that's it. But then once those are handled, you can just increase your rent to market if you want.
Yeah. Nice. Nice. Yeah, that's huge, really.
And the way the law is written is that the tenant is obligated to make sure you get paid. So you don't have to go chase them. You don't have to give them notice if you didn't pay even. If you don't pay within 15 days, you can put up a notice of eviction.
Nice. You don't even have to write up a notice that you're late for your rent, nothing.
You don't have to. I would suggest it because you want to maintain a good relationship with them, but you don't have to.
Okay. Yeah, I guess you don't want to just go barging in and say, "Hey, you're out. You're 2 weeks late." You want to, yeah,
Yeah.
open the conversation and see what's going on and yeah.
And and like then chronic late, they usually consider about 3 times in a row. Chronic late, that's grounds for eviction as well.
Okay. Okay, very good. So, so you're looking for passive investors for these projects?
Yes.
Yes. And so, tell me what you're looking for.
Well, I would be looking for basically a money partner that will want to come in on equity.
Hmm.
I'm looking at 20 to 30 units in that range.
Hmm.
So if that's something that interests you. The price per door, we're going to be looking at uh, probably 100,000 to maybe 120,000 a door.
Nice, nice.
So
And
like this
yeah,
would be like the 2 to 3 million range.
okay. And so you're looking for them for the down payment, for renovation costs.
It's a combination because my goal is to get underperforming buildings
Hmm.
because I know what the rents should be and I can see what they are. So it
Great,
gives us some negotiation to get the price down. And then with that, we can improve the units or just increase the rents and then try to get up to market rents,
hmm.
get the value so that we can basically refinance and get everybody's money back.
Right,
And
right,
then they just get perpetual income afterwards. But
right,
we want to make sure we got for the down payment, for any renovations, we want to reserve to make sure that we can actually handle it and we don't have to do any cash calls to anybody because
right.
nobody wants to do a cash call.
Right, right, absolutely. Yeah. And so likely you would want renovation money because even though you can increase rent, you can increase them higher if the unit's renovated, right?
With the vacancy rate right now, we just rent them out faster.
Okay.
But we like to give a quality product because we don't want a quality tenant.
Exactly. Exactly. Agreed. Yes. Very good. Now, are you looking for somebody as a mortgage qualifier as well?
Well, the building should qualify for the mortgage.
Okay. Okay. But
So we will probably set it up as a corporation, a
mhm,
corporation articles, and then basically based on how much you came in with, you get so many of the share of the corporation.
right. Okay. So, multiple partners then is good. Do you have a minimum investment that you're looking for?
Minimum, I'm going to be asking 100,000 because I don't want to be dealing with like 20 investors. I would want to be
Right.
dealing with 5 to 10 is 10 would be like that's kind of a lot.
Yeah.
Uh,
Yeah.
Closer to 5 would be preferable.
Okay. Okay. And Yeah, I guess depending on the price of the building and the
Yeah.
surplus you want for renos and
Yeah, I would be looking for about 100,000 minimum.
yeah. Okay. So if anybody's interested, and that's in the Saskatoon market
And surrounding area.
and the surrounding area. So if anybody's interested in knowing more about that, they can reach out to you just on Facebook
You
or
can reach out to me on Facebook. They can send me an email, which is my name at gmail.com.
okay.
So it's very easy to remember.
Yeah, probably not a lot of David Vanderploeg's right right
No,
in the room.
and it's just one word, my name. So David Van Ploeg at gmail.com.
Okay, very good.
I'm also on Instagram. You can find me there as well.
Okay,
So
well, that's great. So anybody listening that's interested in investing in Saskatoon, reach out to David. Sounds like a great market. Um, and I'm heading out that way. I think I'm probably going to see you in Edmonton.
yeah, I will be in Edmonton.
Yeah, yeah, that's coming up real soon. So that's going to be fun. I'm looking forward to that. And yeah, anything else you'd like to share about your experience as being a passive partner? Um, anything you'd
Uh,
do different next time?
uh, well, as a past partner, I probably would be looking more at different agencies. What do you do if this gets delayed? What do you do if this gets delayed? What do you do if this changes? Uh, but then afterwards, like the agreement was that basically I'm a money partner. I'm not doing the work. I'm not running the day-to-days. I'm not going to be involved in that. And that's what I would expect. If I'm the working partner, you let me handle the day-to-day operations.
Right,
Uh, I've learned a lot from like renting out a condo that I bought and sold. Uh, actually, I had tenants that didn't want to leave, but they were moving to Germany. They wanted to figure out how they could rent it because they wanted a place when they got back. Because they loved me as a landlord because I treated them very well and they
nice,
treated the place very well as a result.
nice, nice. And probably being a passive partner on a few deals first helped you know what a passive partner is looking for when you're bringing them in, right? To your Saskatoon deal.
Yeah, that it does help. I wasn't active, but doing everything myself beforehand. So I was doing much
Right,
small scale.
right,
So now I'm trying to go larger units, more units, because I found out, hey, wait, it cost me the same for 25 units as it does for 12. Well, why not go for 25? The
right,
closing cost going to be about the same.
right. Yeah, yeah,
So I get the economy of scale. So that's why I'm going bigger.
yeah, yeah. The economies of scale, mitigate the risk. Like there's all kinds of, yeah, reasons to go bigger, right?
Yeah.
And that's what we learn in our education and coaching. And yeah, that's why bringing several people together to go into a bigger deal, it's a win-win for everybody.
Yeah, I love my passive side. It's great. I get to, other people get to make some money. I get to make some money. I'd rather be passive and remotely and more active locally
Yeah,
because then I get their benefits and other people get to benefit with me here.
absolutely. Absolutely. Yeah. I it's difficult to be active remotely, right? You really
It's
have
not
to.
impossible,
Yeah, it's
but
not impossible, but yeah, you really have to have some good boots on the ground and a team that you trust and yeah, it's a little trickier to be active remotely for sure.
yeah,
Yeah. Yeah, but being active or being passive remotely, it's easy, right?
yeah.
Yeah. You just have to trust the working partner and honestly, you shouldn't get into a partnership unless you trust the working partner and that's like you said you know you don't really have a say in the day to day. You're leaving that
Yeah.
job to the working partner to take care of those
So
things.
but that's why communication is so important from your working partner.
So important. So important. Yeah, absolutely. 100% agree. Um, so that's very exciting about Saskatoon. And yeah, so I guess anybody that would like to reach out, David's offering equity positions, which is I was I think the way to go. We talked about that too, right? With the RSP mortgage. It's maybe for people that don't really understand hardly anything at all about real estate investing, that's the way to go. But once you know a little bit more about what you're doing, you want to get into an equity position so that it keeps on keeping on, right?
Yes.
Keeps keeps building. It's
Yeah,
creating generational wealth. Yeah.
and I'm always looking for new opportunities around this area. So
Yeah, yeah, absolutely. Just a little bit on that. I just posted a little clip today of he's a local real estate agent and investor, and he explained it so wonderfully about buying a $500,000 condo, say, and just they go up on average over history 5% a year. So people think, so you buy a $500,000 unit, it goes up 25,000 in 1 year. And people think, well, that's not that much money. But the way he explains it is you put 20% down. So you only put 100,000 down. The 400,000 is your mortgage that your tenants are paying, right? So you're making 25,000 on your 100,000 that you put down. So you're making 25%. Plus you're getting mortgage pay down, right? So
and if you start getting creative, like taking out a line of credit for your down payment, well, all of a
let
sudden
me
you have a
talk to you
mortgage and a
about
line
being
of credit,
creative.
and
Right? Yeah.
and your return on your investment starts to go really high.
That's right. That's right. Using investment cards like 0% balance transfers and things like that. So you're paying 0% on the money and closing on a deal, right?
Yeah,
Yeah. I mean, if your lender will allow that. Sometimes, that's with a private mortgage, a vendor take back mortgage, they're a little more flexible on things like that. Sometimes traditional lenders won't allow for that, but it's all about creating the deal, right? And finding a way to bring in equity partners, money partners, just making the deal happen.
yeah,
Yeah, and those are all the tips and tricks that that we learn of things to do.
yeah. Make sure you're solving people's problems.
That's right. That's right. Absolutely. Everybody's problems. The passive partners, the sellers' problems, the all kinds of that's what we
Yeah.
are. Problem solvers, right? Yeah.
Yes.
Yes. And providing quality housing for people that don't own their own home. So that's
Yep.
another problem that we're solving.
Yes. Lots of problem solving.
That's right. That's right. That's what I love to do. Solving problems. I had an investor reach out to me this week, and she had lent out on a P note and it didn't go well. So she was basically back to square one and she was trying to come up with some ideas of, how she could move forward. And she said, I know you're the creative financing expert. So we talked about different strategies that she could use. She had a couple of opportunities. And I was saying, like, you have to talk to them. I said, you have to solve their problem, right? So whatever, and start the conversation that way. So that's how to get those things done with vendor take back mortgages and things like that.
Yeah, and there's a lot of different strategies, and you can always invent a new one.
That's right. That's right. And it's all about communication, right? Like talking to the seller and what's the problem that they need to solve. Do they need cash now? Are they just tired of the headaches? Are they, you know, do they want to defer their capital gains? Do they want to do a vendor take back? All those kind of things. So yeah,
Yeah.
lots of strategies and lots of problems that we can solve.
Yes.
Yeah, very good. Very good. Now, um, what kind of situations are you looking at in Saskatoon? Is there any vendor take-back mortgages or agreements for sale? Any of those kind of strategies that you might put in place or?
It depends what the seller needs, right?
Right, right.
So it depends where it is and what the seller needs, how we can solve their issue. Like if they just need cash, well, I think the take back might not be the place.
Right.
But if they're tired of it and they've had it for 20, 30 years and mortgage is pretty much paid off and they want to retire, it's like, well, this is a good opportunity for you to actually get money in retirement from a property that you know.
Exactly, exactly. They're familiar with the property. They can defer their capital gains and get that extra income from being the bank, right?
Yeah.
Yeah, and I think that's all about a lot of owners don't understand that strategy, so I think a lot of it is educating them how
Yeah.
beneficial it is to them, right?
Yeah, like the capital gains is huge, and it's going to be huge in some of these buildings because they may have bought it when for 200,000 30 years ago.
Yeah,
Now
yeah.
it's sold for 1.2 million. Well, if you can defer that over 5 years, that's quite a bit of tax savings.
That's quite a bit of tax savings. And who knows, maybe that our new elected Canadian government will look at those kind of things. And no matter who, gets into power, maybe they'll learn from, yeah, that to attract investors, to get housing builds going and solve that
Or,
housing.
yeah, or maybe add something like the 1031 exchange in the US,
Yeah,
which would be
exactly.
incredibly valuable.
Hugely valuable to investors. Yeah.
Yeah.
And helping with the housing crisis, I think.
Well, then, like, it doesn't make sense just to sell a property and not buy something else.
Well, and that's what we do, right? So why penalize us for um, going bigger or maybe taking the money and putting it into a new build or offer incentives for investors to help solve the housing crisis, right? Don't penalize them.
Yeah. And you also, when you sell it, you give somebody else an opportunity to also move up as well. So, like, you're helping somebody else, you're helping yourself, you're helping the general population. So it's just a overall win for everybody.
That's right. That's right. And yeah, it'll get a new investor maybe into a smaller property to start. And then some of that capital will go into even if they made it that you had to invest in new builds, it would still that would help solve the housing crisis.
Yeah.
Reinvest that way. I mean, the government has to get creative with, obviously we're not winning the housing crisis game, right? So they have to get a little more creative with encouraging investors to build more housing.
Yeah. Yeah. It's
Yeah. I think that's a great idea. I think I'm going to bring that to them. Why don't right? Instead of paying capital gains, how about if we reinvest in yeah, in new builds, right? I think that's great strategy,
with some of the capital gains we pay, we could easily start a new build. So
right? Yeah, yeah, for sure. I think that's a great incentive. I'm gonna write I'm gonna write to them and suggest that. Right?
they might be watching. We don't know.
Maybe. I think they're busy tonight.
Probably.
I think they might be a little yeah, counting numbers tonight. Anyways, that's great. I think we've solved the world's problems or Canada's problems here tonight. Right?
We may have a solution for one of them.
That's right. That's right. And that's what it's all about is creative thinking, right? And solving problems.
Yeah.
Absolutely. Well, thank you so much, David. It's a pleasure to see you again. We just spent some time on a cruise together. Um, REI at Sea, that was a great event. And yeah, that was wonderful. Um, Cross paths in Greece, right? But didn't
I
actually.
think I missed you by a few hours.
Yeah, exactly, exactly. From one mastermind to the next. But again, another great event. And these are all things that we do as real estate investors to expand our mind, to learn how to solve problems, learn how to get creative solutions to solving problems, really, right? That's what we do. Yeah, so that's wonderful. So, pleasure to see you. Look forward to seeing you in Edmonton in just a couple of weeks, 2.5 weeks.
May a long weekend.
Yeah, yeah, that's so exciting. So, any last words you'd like to leave the listeners with?
Well, the best time to buy real estate was 20 years ago. The next best time is today.
Absolutely. And when's the best time to sell?
Well, hopefully never.
Absolutely. And never sell if you have to, right? Or try not to sell if you have to, because that's when you lose. But
Yes.
very good. Very good. So, yeah, there's always going to be something. I was just listening to a podcast about somebody had a list of, I'd love to get my hands on that list of 20 years of reasons why somebody didn't invest in real estate. And every year was a different reason, a different excuse why it was a bad year. And 20 years later, and they still hadn't invested in real estate. So here they are. There's always going to be something. There's always um, going to be something going on in the world, uncertainty. And that actually right now is a great opportunity to invest in real estate.
That sounds so familiar. Was I in the same podcast
I, yes,
last Thursday?
yes, 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 yes. We need to get that list.
Yes, we do.
Yeah, yeah, that sounds like an amazing list, right? Just for people to be able to see there's always something going on and just get in there and buy it. It's like buying your first house. You're so scared and you think the mortgage is so huge, and then 5 years later, when you want to go up to your next house and you've got all this equity built in to use as a down payment. Well, real estate investing is the same thing, right? Like it just grows. And just think
Yeah.
about that one house, how it grows. Think about if you were invested in 10 units or 20 units or 30 units. They're all growing, right? And that's how generational wealth is created. It's not timing the market, it's time in the market, right? So it's just
Yes.
get in
Over
there.
20 years, it's
Yeah,
going to go up.
that's right. That's right. And average is 5% a year. So just get in there, however small you start, and then just start. Just like when you buy that first little condo or, little 2-bedroom bungalow as your first home, it's the same thing. And then borrow against it to invest in real estate, right?
Yes.
Yeah, yeah, and then just yeah, rinse and repeat. So, if you want to talk to either David or myself about getting into real estate investing, we believe wholeheartedly that it's a great investment, and we know all kinds of great strategies of how you can make money using registered funds, using your HELOC, using 0% investment cards, balance transfers, all kinds of things, right? To get into it. Okay, well, we're gonna wrap it up for tonight. Thank you everybody again. Thank you, David. Great to see you. And I am Jan Carmanico Reeves, your host. Always looking for guests to be on my podcast. Shoot me a DM if you're interested, want to talk about partnerships, and love to have you on and share your expertise and experiences for the viewers. So we'll see you all on the next video. Have a great night, everybody.